Hello, okay, with Zuna. Let's look at two indicators that show trend direction, trend strength, and trend reversals. On the chart, I have ES or E-mini S&P futures. This indicator will work for you on stocks, any kind, futures, any kind. Okay. Since I don't trade forex, I've never even bothered placing any of these on forex. I do trade currency futures, and they work. These two indicators work beautifully on it. Like I said, you can use them on anything. We have paint bars here. Okay, the only reason I put the paint bars on the candles because this is a trend paint bar study. I want you to have a contrast between this indicator and between the two that I want to present today. The first one is called SDI1 Day Trader. The second one is called SDI2 ST and reversals. These letters stand for Supply Demand Index 1 Day Trader, i.e. intraday price action, Supply Demand Index 2 Swing Trader, and reversals. Both the indicators combined give you a very precise high probability idea of the trend. And these two indicators are very stable compared to most trend indicators that you'll see. Just take a look at these two and this day's price action compared with the paint bar studies, and you'll pretty much get my point. And don't worry that I have this on 1 minute. You can change your chart to 3 minute if that's what you prefer. 5 minute. Um, Most day traders trade basically from tick charts to 1 minute all the way to 5 minute. Some do trade using higher intervals like 10 or 15. These two indicators, I really designed them so they for optimal performance on 1 to 5 minute. If you want to use them on 15 minute, they will work on 15 minute, and there's no problem using them uh, on a 15 minute chart. I don't personally know anybody who uses higher interval than 15 minute to trade as a day trader. Uh, because you're getting into short-term swing traders when you get higher than that. Okay, let's refocus back on these two indicators. Let me give you an idea of what all these colors and lines are. As you can see, there are two colors, green or dark green. Uh, this indicator serves a couple of purposes, and I'm referring to the SDI1. This histogram gives you the trend strength or lack of trend strength or decreasing trend strength, or you could refer to it as trend momentum, increasing or decreasing. And these dots here, now that I have zoomed in, the dots below the histogram give you the trend direction. So two different purposes, and you would need to monitor both the histogram and the horizontal dots. Trend direction, simply telling you up or down, uptrend or downtrend, and trend strength, simply telling you the momentum is continuing to get stronger, or it is decreasing a little bit, or it's decreasing where the histograms come all the way down to here, decreasing by a lot. Okay, the yellow, as you notice here, is the time it takes for this indicator to calculate and give you the highest probability of what the trend would be for today. As you've noticed, markets when they open, there's a lot of activity, and sometimes they need to digest some information to figure out which way they want to go, and sometimes they open up and take off. There is some time needed for this indicator to give you the trend. However, the histograms will start plotting right away, and even though this indicator is calculating, if you see the histograms like continuously going up, it gives you a good idea of what the market's going to do the remainder of the day. Notice here the histograms were going red for 2 bars, then dark red for another 2 bars, then it just came back up to green. Okay, that's SD1. Let's look at SD2, SDI2. SDI2 simply gives you the trend for the higher time frame. It gives you the supply demand situation for the higher time frame. And it's very important not to get tunnel vision just by looking at SDI1. day traders tend to get tunnel vision, and then when a huge move or huge reversal takes place, or just a big trend day takes place, they always wonder, well, where did that come from? That's because experienced traders take a look at the market from all perspectives, not just from a day trader perspective. And that's the reason why day traders who are just focused on intraday activity will get blindsided. SDI2, which is the higher time frame trend, has two purposes. One, it'll give you the higher time frame trend, and if it's green as it is right now, strong uptrend. If it were dark trend, it would be medium uptrend. Okay, same as the direction of the trend on SDI1. If it's green, strong uptrend. If it's dark green, medium uptrend. If it's cyan color, I'll get to that in a little bit. Another purpose of SDI2 is to give you reversal signals, and that's what we actually got the prior day, a reversal signal. So we would want to simply, when the market opens today, we would already have an idea of, it actually didn't do it the day before, it did it right at the open. It'll do it two places, and this is important to keep an eye on. Either right at the open, it'll print the reversal, or the last bar of the prior day. So this is a feature many love. They actually like this a lot because a lot of times you'll get the reversal the prior day, so you'll start planning ahead what you're going to do tomorrow. And when you get reversals, your job is to basically look for that directional move in the morning, or get position and ride the trend all the way till the close. Which days like that, you can catch either the directional move, which would have been something like this. You catch a quick 4 or 5 points, or you'll catch the whole trend. And that's pretty nice to be able to catch the trend from the beginning of the day. Feels pretty good. And if it doesn't print the prior day, then you would want to watch the first print of the day to see if there any changes occur. If they don't, then just move on. And the way it works is that you would have, in order to have a trend reversal, obviously it means that the trend is going to change. So SDI2 would need to be either dark red or red, and then switch to green. And it needs to be green, not dark green. So if this bar that I'm highlighting right now, or that dot, would have been a green color, then that would have been a reversal signal. We didn't get it the prior day, we did get it right on the first bar. Okay, that confirms it. Now as soon as this confirms, it doesn't mean that as soon as the market opens, you just go ahead and buy. It doesn't work like that. Now you switch to, this is where the SDI1 comes into play. And you don't want to see it, like, you don't want to see the histograms plotting red. Okay, you would want to see the histograms plotting green as it is here to confirm. So what happens is, you either, right as soon as the market opens, the histograms are green, confirming the reversal, and the market usually moves up and pulls back, and I buy the pullback. Okay, and I would want the histograms to be green. Other way that I do it is that I have some levels that are important to me, and I see the market testing those levels, digging into them, and I'm watching order flow, and then that confirms it, and then I'll buy. So sometimes I can get the trend, I can get positioned within first few intervals right on my SR levels. So you really would have to incorporate this into your own method of trading. I just wanted to show you the features. Going back, and since these two indicators are, it's going to take me a little bit of time to explain and also go through some data. I'll have to make at least 2, possibly 3 videos to explain everything. I think for this particular video, it's gotten long enough, and let's continue the rest on the second video, and I'll explain more and we'll go through more data. See you there.